Dear investors, in this 4-part series, I am going to talk to you about Emkay New Vitalised India strategy, in short NV. This strategy is going to focus on manufacturing or industrial sector as an investment theme. The manufacturing sector is today standing at a holy trinity, that is the manufacturer, the government, the consumer, all at the right place at the right time. Similar trinity we had observed way back in late 90s or early part of this 21st century for IT services. That is, we had world-class Indian IT companies who were ready to deliver services to the world. We had the government which was implementing relaxed taxation norms as well as liberalizing the forex norms, and we had consumers in terms of large US or European IT companies who were ready to consume those services. Similar trinity we are observing today in terms of Indian manufacturing sector. In this part of the series, I am going to talk about the first part of that trinity, that is the manufacturing companies. The manufacturing companies today are witnessing significant rise in their cash ROCEs, that is ROCEs adjusted for taxes as well as the working capital. Today at 20s or 20% plus kind of a number, these ROCEs are significantly better than the comparable financial investments that these companies have an option to invest into, which means that if today they were to reinvest their money in their own capacities, they would earn significantly higher returns versus, let's say, bank deposits, FMPs or debt funds. This is also possible because if you look at the capacity utilization of the industrial sector as highlighted by the RBI for December 2021 has risen to almost about 73%. This number of 73% is even higher than December 2020 or December 2019 number, which was at 68% and 70% respectively. This has also become possible because they have delevered their balance sheet significantly. If I look at the debt equity ratio of BSE 500 manufacturing companies versus about 0.85x at about 5 years ago, that number has significantly come down to almost about 0.65x as of FY21. Fourth, if I look at as a consequence of the above, the registration of manufacturing companies today as of October 21 has almost risen 10x in last 7 years. Today, out of the total companies manufactured with the register of companies, almost about 30% are in industrial sector. That number is also highest in last about 7 years or so. And point number 5, as per Ministry of Environment, the environment clearances sought and granted to the manufacturing companies has also gone up almost 10x in last 7 years. Friends, now that I have highlighted the first part of this trinity, that is the manufacturer, in the coming episode, I am going to highlight about the second part of this trinity, that is the government. Stay tuned. Thank you.